couple of things there before I go through the agenda with everyone. It's myself hosting the webinar tonight. I'm Sean. I'm the Director of Mortgages at SYS Mortgages. I'm joined by Cian O'Brien. Cian is one of the financial planners and the financial planner who works closely with the mortgage team. And he's here to sort of cover off any questions outside of mortgages, i.e. to do with mortgage protection, anything like that. And you can put any questions like that in the chat bar above. We will do a Q&A right at the end for any questions. So it's important that I've found in the past with these webinars, the more questions we have, the more things that I might not cover in the webinar that will be important to people. So please feel free to ask questions as we go. Cian will answer any questions outside of mortgages, and then Cian will ask me the questions right at the end to do with mortgage themselves. So look, there's an agenda here for this evening. We'll go through the mortgage rules and indeed what's in it for public sector, i.e. teachers, because things have changed and things changed for the better with regard to borrowing power. We'll look at first-time buyers. What are the rules around that, the basic rules, and the rules around it with regard to salary scales and so on. We'll then briefly touch on trading up. So if you've got a mortgage already, although the rules are very similar for first-time buyers, we'll cover that off. And there will be some key messaging there for switching mortgages. So if you have a mortgage already, what are the things you could do with it now? But there are some key messages in there for even if you're a first-time buyer, i.e. what happens down the track and why it's important to make the right decision from day one when you're choosing your mortgage. We'll go through the costs associated with a mortgage and some money saving tips there. Really, really good one here. Monthly repayments. I'll help you guys to actually plan a budget and give you a rough idea of what a mortgage would cost out there. And there's some real life examples there. And then we'll go through the mortgage journey, i.e. where do you start and where do you finish? How long does it all take? We'll go through a mortgage checklist just to show you what are lenders and banks looking for these days. And then we'll have a Q&A. And believe it or not, I'm going to try and cover all that in the next 25, 30 minutes. It is being recorded. So if anybody wants a recording, it'll be put up on YouTube and sent out. So you'll be able to refer back to the webinar itself. So cool. Look, just before we get started, if you wouldn't mind, oh, sorry there, I wouldn't mind you guys doing a quick poll for me, if I can get the bar down. Just to ask you a quick question, please, if you wouldn't mind. Just take literally 30 seconds. It's on there, so if you wouldn't mind answering those questions for me, and then we can hit the poll in a while. We'll just finish there in a couple of seconds. Okay. That's brilliant. Yeah, we'll finish that one there. We've only got one more poll at the end. I'm not going to drive you guys mad with polls. It's more about you guys learning tonight and obviously getting some key messages there. So we'll end that and share results, and we'll stop that poll, and now we get on with the rest of it. Okay, cool. Okay, mortgage rules. There's some oh, somebody's raised their hand there. We okay? Yeah, no, cool. Okay, mortgage rules. There's some basic rules here, but I will cover what's in it as well for teachers, because things have improved hugely and there's some great news out there. So, but the basic mortgage rules are that under normal central bank guidelines, you can borrow up to 4 times your income. And that changed really for first-time buyers in the last year and a bit. For teachers, however, you can now go on points up the scale. And what I mean by that is you're going up to 5 points up the scale, believe it or not. So simple example, if you're on point 1 and you're on 35k, and then point 5 takes you up to 48k, I can base your income on 48 and do 5 times that with certain lenders. Most lenders now are allowing us to go up the scale, and it starts at 1 point up the scale. Some are doing 2 points up the scale, some are doing 3 points, and there's even one who's gone completely bonkers and gone 5 points up the scale. So there are rules around it, but it's great news because it does increase your borrowing power. mortgage rules there. Anybody who has got a mortgage already, the rules changed for you, whereas you can do 3.5 times income, but you now need a lesser deposit, and I'm going to cover that off shortly. So if you were to keep your current home and move, you can actually do it. So first home scheme now available for new builds and self builds. Again, I'm going to cover that off in a while and tell you how the first home scheme works and how you can effectively get on the property ladder using that and the Help to Buy scheme, which has now been extended to 2029, to get on the property ladder without any cash input from yourself. So there's going to be some key messages. Okay, first-time buyers, go straight into it. So as a first-time buyer, you can typically borrow up to 90% of the purchase price. And I'll go through what is deemed a deposit in a short while. So as I said, you can get 4 times your individual or combined yearly income. Is that fair? There's a lot in the news about it, that individuals can only borrow the same as joint couples. I don't agree with it, but there we go. We are where we are. 4 times individual or joint income. That's your gross annual income. And we can take a lot of things into account for teachers, i.e. if you're getting extra for a qualification you've got, if you're on a principal's allowance, even if you're marking papers, you've been doing it for years. So we can take a lot of variable income into account, and we can even take 100% of variable income. We are also achieving up to 5 times income for some individuals if they need what's called a mortgage exception. That's something that goes outside central bank rules. And again, it increases your borrowing power. But what I'm finding now with teachers, because we can go points up the scale and look at future income, we're able to get you quite a lot of buying power. So rates are still good compared with rents. We all know rents have gone crazy, and I can't believe it. But rates are very good at the moment and getting better. And there's even products out now from the likes of Avant Money, who are called Bank Inter, a huge Spanish bank who've entered the mortgage market here for a number of years. And their rates are starting out almost 3%. You get green rates out there from 3%. So there are very good value products out there. And again, I'm going to give you some very good examples of those as we go through this evening. 10% deposit. You do require a 10% deposit, and that can be made up of savings, Help to Buy, or the shared equity scheme, or a gift. So I'm going to cover those off next. So Help to Buy scheme. That is still around, and it's for first-time buyers, and it is available now until 2029. We all thought it was going to go after the last election. It didn't, and it's now around until 2029, and it's been around since 2015, and it has helped lots of people get on the housing market. It does give you up to 10% of the purchase price, and that's up to 30K as maximum. And it's capped at a purchase price of 500K. So, but it's free money, and it's based on your revenue that you've paid out to the tax people over the last 4 years. So a lot of people are qualifying for the whole 30K. If you're buying jointly, you must apply for the Help to Buy scheme jointly, and it'll be assessed jointly. But it does get you on the market. It's for new build properties, or it's for self-build properties, and they're even talking about bringing it in. It hasn't come in yet. They are thinking about bringing it in for second-hand properties. Now, it'd be great if they do, because it is, as I said, free money, and it can get you on the property market. So there's the first home scheme. That comes under the Housing for All. So if you're looking up any of these, look up the Help to Buy scheme Ireland and look up the Housing for All. That's where you'll find the first home scheme. That's where participating banks backed by the government will take an equity stake in your property up to 30%. Now, you do have to give it back at some point when you sell the home or when you decide to give it back, but it's interest free for the first 5 years. So it's good to have, but you do have to give it back. And there could be a downside to it. If your property goes up in value, what you owe will go up. But if there was a mini downturn in the housing market, then what you owe could be less. But it is up to 30% of the purchase price of the home. And again, it's for new build properties. Here's the trick. If you get help to Buy scheme, the first home scheme reduces to 20% because there is a 70% cap that you must borrow against any property, but you could get on the housing market for free. You have got to give the first home scheme back, but and the lenders will allow it. So, for example, if you're paying sky high rent where you are, you haven't been able to afford to save up a 10% deposit in savings, then the first home scheme and the Help to Buy scheme could get you on the property ladder. They're worth looking up. And we're really happy to give advice, or I could give anybody advice on them. While we're going through this tonight, guys, if you have any questions, pop them up in the chat section, and we are going to do a Q&A right at the end. And if you've got any questions outside of mortgages to do with financial planning and protection need around mortgages, pop them in there, and Cian will answer them this evening as well. Repayment capacity. This is something that you need to take into account and need to be prepared for, because most lenders take it into account, and it could hinder you getting on the getting approved. But it's not all bad news, so we'll cover that off next. Okay, preparing for a mortgage. Repayment capacity is the proven ability to meet mortgage repayments. It's based on your financial track record. What that means in a nutshell is, are you paying for something today that will finish or could finish when you turn the key on your property? And what I mean by that is, if you're paying rent today, and a good example here, for instance, if I put you with Bank of Ireland, your mortgage was going to be €1,000 per month. Bank of Ireland would want you to be able to demonstrate that you're doing something at the moment that costs €1,000 a month that will stop when you move into your property. So you're paying rent of €1,000 per month. That's the box ticked. You've satisfied repayment capacity. You're living still with your parents. You're saving €1,000 per month. That's that box ticked, and you move on with your application. You're paying a loan on a car that is going to finish before you take out the mortgage, and that's €1,000 a month. That's the box ticked, and you're done. It could be a mixture of all three. Yeah, it could be a mixture of all three, but they do assess it through looking at rent or regular savings. So if you are paying rent, please, even if you're paying it in cash, make sure you take out that lump sum every month at around about the same date and mark it in your bank statements as rent. Don't be paying it in dribs and drabs. They look at regular savings, and the pitfalls I see people in regular savings is they dip into their regular savings for a holiday. So if you are saving regularly, please don't dip into it. Have a dedicated savings account for your mortgage and try not to dip into it, because once you dip into it, the lender will reduce what they deem repayment capacity. Loan repayments, as I said, they can affect the mortgage in a good and a bad way. If a loan is finishing, we can use the payments in a good way. Loans can affect the borrowing power. I mentioned before, you can get up to 4 times income. If the loan is big enough, and depending on your income, it could reduce you from getting 4 times income. Now, don't rush out and clear all your loans. If the loan was affecting it, we'd work that out for you in a calculation and let you know that was the case. And if it was possible, all you'd have to give is the lender the commitment that you would clear the loan before you took out the mortgage. So don't go rushing out, clearing all loans and things and ringing me up telling me that was bad advice. Up to 6 months before you get a mortgage, they look 6 months into your bank account history when they're looking at repayment capacity and so on. So it's not all bad. If you weren't ready today, you hadn't been showing your rent correctly, you've been dipping into your savings, you could still be ready to apply for a mortgage around about November time, given the right advice by somebody like ourselves. So we'd give you a plan of action, have a look at what you've done to date, and then move you on from there. As I said, renting. Now, why I've had this is lenders have different rules. We represent all these lenders, and this is the representation of lenders in Ireland at the moment. Haven is the broker arm of AIB, as is EBS. So Haven is Allied Irish Bank. Bank of Ireland, we all know. Avant Money, fabulous products out there at the moment. They've even got a tracker-like product. It's groundbreaking, and it's great. They're owned by Bank Inter, one of the biggest banks in Spain, so no fear of them. Then they're actually entering the Irish market properly now. ICS Mortgages, they've been around for a long time. Rates went up when rates went up. They're now getting very competitive, and they are offering 5 times up the salary scale. So watch this space. I think their rates are going to come down even further. PTSB, we all know. Newer Money, the latest entrant into the mortgage market in Ireland. They require 0 repayment capacity. The rates do reflect that, and they're not the most competitive in the market. But if you were desperate to get on the housing market, they may be a home for you. And they're a fabulous lender. They're super quick. If I put an application in with them today, I'd probably have a mortgage offer out in 5-6 hours. And Moco, they're owned by another bank, and they've been in the market now just over a year and a half. So look, there's a good selection. Moco are 50% repayment capacity. Nua Money are 0 repayment capacity if everything else fits. PTSB are 85% repayment capacity. ICS are 100% repayment capacity. Avant Money are, I believe, 100%. Bank of Ireland are 100%. Haven are 100% of a stress rate, but there are ways around that. So what I'm trying to get at is pick a broker to do all this for you. Brokers represent over 50% of the market now for introducing mortgages to lenders, and we could find a home for you for depending on your repayment capacity. But it's important to explain it, because if you get repayment capacity just right, you'll open yourself up to the whole market. There's no such thing as a stupid question. So anything at all, just fire a question, and Cian's going to ask me the questions right at the end. So please feel free to put them in the chat section up the top. Have a house and look in trade up. So if you've got a house already, important messages in here for even if you're thinking about getting a house. So again, rules change, so you can borrow now 90%, which is important. What I'm going to explain in a moment. Deposit for your new home doesn't have to be from savings. It could come from the equity in your home if you're actually selling your home. If you're looking to trade up and keep your primary residence, so anybody getting a mortgage, this is important for. If you had a flat in Dublin and you decide to move back down to Cork, but you decide you'd like to keep your apartment in Dublin, as long as you can let that out and it's going to cover your current mortgage plus a little bit on top, the lender will ignore that when you're going for your new mortgage on your new property. So you won't be penalized for having that. You will have to have the deposit for the new purchase from somewhere, hence the 90% could be doable. Yeah. The only problem with trading up and you've got a property already, the Help to Buy scheme and the first home scheme don't come into it unless you've gone through some sort of a marital breakup and you've lost one of your homes. So it's important there. Yeah. Cool. Switching. This again is important for everybody listening tonight. We'll get onto the checklist now on costs associated with mortgage in a short while. Can I save money by switching? When you take out a mortgage, you'll have a couple of choices. It's 5 years to 40 years now. Most lenders are 35 years. Nua Money are 40 years. But it's 5 years to 35 years. So you make a key decision at that point. Will you be going variable rate, which means your payments could vary on a monthly basis? Or will you be going fixed rate? Most people, and about 85 to 90% of people, could change now with this new Avant Money product, but about 85 to 90% of people choose a fixed rate product because that fixes your payment for a period of time. And most people choose between 3 and 5 years. So when it comes to the end of 3 to 5 years, you can do something called switching. And that's when you can change your rate. So as a first-time buyer, going back there for a moment, I always recommend take a long term, because it'll only be for a 3-year period really, and then you review where you're at, because you'll have things to spend on your house. But for anybody this evening who's got a current mortgage, you should look at, and what'll happen after your 3-year fixed is you'll be offered options by your current lender, and you should go and seek advice. Is there a better product out there? And most of them will come with cashback that will cover the costs involved of switching from one lender to the other. But it could be a very lucrative thing to do at that point. So it's called switching. And then you review your mortgage terms. And anybody who's looking at the moment should be reviewing their terms now, because rates are coming down. And to give you a good example there, an original mortgage of 250, current rate 4.5% if you want a current variable rate, term remaining 25 years, monthly repayment before would have been 1390. Switching to a rate of 3%, which is currently out there, new monthly repayment approximately 1186. So a monthly saving of €204, total interest saved of 61,200. Alternatively, if you were comfortable with your existing mortgage payment, you could actually reduce your term to 20 years, saving 5 years of payments, which is the best option if people can afford it. So anybody out there who's got a current mortgage, come and talk to us. I'm glad to do the exercise for you. If you're better off staying where you are, we'd always tell you that anyway. Okay. Associated costs. When you're buying a property, there are costs involved that some people don't take into account, and they're important to take into account. And this is where you could save some money. Lenders, solicitor. So you have to have a solicitor when you purchase a property, and solicitors' fees are anything from 2 to 4K. I've seen them higher than 4K. So the trick there is to shop around or to get a recommendation from somebody like ourselves who to use, who offer fixed fees and so on. But it is 2 to 4,000 euros. All I would say is, even if it is a little bit more expensive, use a firm who've got a couple of people in there who do what we call conveyancing. That's the house buying process. Because if somebody off sick, somebody's in court, at least somebody is moving your mortgage along for you. And when you do find a property, the people you're buying off are getting very impatient in the current housing market, and they expect the sale to move along quickly. I'll cover off a little bit more in a short while what solicitors do again. Stamp duty, 1% up to a million. And then it's extra over a million. So it's 1% up to a million. So for example, 300K, 1%, 3K in stamp duty. That's payable before you turn the key in your door. And that's given to your solicitor to pass on to revenue. So you need to take that into account. So it's whatever it is, the purchase price. There used to be tax breaks for first-time buyers. There's no tax breaks for stamp duty and any longer. So they are there. Lender valuation. A lender will always want a valuation on whatever you're buying. So don't rush out and get one done yourself. The lender will insist on getting a valuation done on their behalf. And it's a very basic valuation. They'll go out, they'll look at the property, and they'll say it's either worth what you're paying for it or it's not. And I'm seeing very little being downvalued at the moment. If there is something glaringly obvious, i.e. if you find a doer-upper or you find an older property, they may spot something on the roof they're not happy with. It will want to be very obvious, and they may ask for an engineer to go out to look at the property. You've probably got an engineer in mind anyway. Engineers aren't compulsory for getting a mortgage. If the valuer says they would like an engineer's report, then the lender will want to see it. If they don't, the lender does not want to see your engineer's report. And if you're buying a new build property or an apartment in a fairly new block of flats, you probably wouldn't get an engineer out at 500 to 1,000 euros. If you're buying an older second-hand property and you want peace of mind, you may enlist the service of an engineer who does a proper report, looks at the building, makes sure it's sound, and so on. And then we got buildings insurance. That's 300 to 500 euros, depending on who you're with. I would say review your buildings insurance annually. It's a bit like car insurance, because providers do. It's not based on your age or anything like that. It's literally based on the rebuild of the property and whatever you insure your contents for. So that is compulsory. There's one other insurance that's compulsory. That's what Cian covers for me. So I'll leave Cian explain that there while I have a drink of water, if that's okay.
Thanks, Sean. Hi, everyone. As Sean mentioned, my name is Cian. I'm a financial planner with SYS Mortgages. So my role is that I'd work closely with the mortgage team to help clients with the protection side of things. So that would include mortgage protection, life cover, income protection, and more. I suppose the benefit of using us rather than going directly to a bank, much like the mortgage team, we're not tied to any one insurer. So we've access to all the main providers on the market. So we do the shop around for you. We find the best cover at the best price, tailored to your own specific needs. The cost can vary depending on every individual. So Sean is right. It could go from anywhere from, I've seen policies, €10, €15 a month, all the way up to 100, €150. The only way really to get a quote on that will be to reach out, and it's all done individually. So what I'll do is I'll drop my email address into the chat. If any of you want to reach out directly, or if any of you want to, even if you have any questions, I see a couple of questions come in for the mortgages there. I'll leave them to the end to ask Sean. But if any of you questions around financial planning or anything like that, reach out in the chat or else drop me an email separate.
Perfect. Thanks, Cian. And all I would say on the life cover, guys, I don't advise on it, but it's important to choose the right one from day one, because life cover does go up as you get older. So it's not like buildings insurance where you review it annually. You normally pick one and stick with it with your mortgage. So it's yeah, that's cool. Thanks ever so much, Cian. Monthly costs. This is an important one to write down, but it will be available. We are recording this, but this will give you an example of, and the reason I do it for 100,000 euros is you can work out your own budget. So there are rates out there at the moment from 3%. And if you have a look there, 100,000 over 35 years at 3% would cost you 385 euros per month. So if you're thinking of a mortgage of 300,000, then do that. And a good way of doing it. So if you're thinking of a mortgage of 300,000, you divide 300,000 by 90 and then multiply by 100, and that will give you your purchase price. So some keywords, but you could see there, and that's why I tell first-time buyers, pick 35 years. If you're picking 20 years, you've got nearly an extra 200 euros per month there to go to IKEA to do up the property for 3 years, and then after your fixed rate finishes in 3 years' time, then review it and maybe reduce the term of your mortgage. But the key there is get proper advice about it. And while I'm on that proper advice, when you're thinking about a broker, I'm not forcing anybody to use SYS mortgages. Check, do they charge fees? We don't. Check, have they got all the lenders? We do. So, and so on. So just make sure there you're getting correct advice. So cool. Excellent. So that's brilliant. Okay. The mortgage journey. Okay, I'm always asked where do we start, Sean, and where does it finish? The only place to start is to get yourself approval in principle. And approval in principle is something that's valid for 6 months, 12 months with a couple of lenders, and it gives you buying power. So it's assessed on your documents you've supplied, and it's a proper assessment. All it's missing is the mortgage valuation and the property. So approval in principle, it gives you an amount of money that you can show an auctioneer that you're available and able to buy a property. So get yourself an approval in principle, valid for 6 months, and that's when you go out and look for properties. So the approval in principle, all the heavy lifting is done at that stage. You've provided all the documents and so on. So, but that's the only place to start. Yeah. You then go shopping and you secure a property. You pay a deposit when you secure a property to the auctioneer. That is a refundable deposit. The important thing there is get a receipt, because we need to submit it to the lender, but you will pay a security deposit. If the property fell through, and until your solicitor tells you, that's a refundable deposit. Yeah, it's once you've secured a property, we get the valuation carried out on it, i.e. this is the basic valuation on behalf of the lender. And it's your safety net to make sure that you're not overpaying for the property. And I know properties are extortion at the moment. I do feel sorry for people, but I'm not seeing many being downvalued. On the back of the valuation, you may get your engineer's report done, but that's something you get done independently. Yeah, we can always recommend an engineer, but you get it done independently. Your solicitor is working away in the background when you secure a property, and the solicitor is working on something called a contract of sale. So a contract of sale is something between you and the person you're buying off. And the contract of sale literally details everything. And your solicitor's job is to make sure that the person selling you the property is able to sell you the property and that you're able to put it in your name and that it's planning compliance. So there's a lot of work goes into that in the background, hence 2,000 to 4,000 euros that they're charging for doing that work. They're a key person in the whole process. Valuation takes place, solicitor working in the background. Your mortgage offer should pop out. Now, your mortgage offer is a very, very important document, and your solicitor will go through it with you because your mortgage offer is your contract between you and the lender, and it's set in stone. If you're in a 3-year fixed rate and you make all your mortgage payments, if your lender left the market for whatever reason and sold your mortgage on, you were still on that rate. So it's very important to make sure that what you thought you were getting from your mortgage broker is in the mortgage offer. Yeah. So solicitor's happy with the mortgage offer. Solicitor's now happy with the contracts. You sign the mortgage offer, you sign the contracts, and you hand over the rest of your deposit. And then you plan your move date. That's what's called signing contracts. And then the solicitor will pick a moving date for you and you move in. How long does it all take? Literally, when you find a property to move it in, I'm seeing them as little as 2 months to 3 months now. If you asked me this 5 years ago, it was taking 4 to 6 months. The market is dictating now that people need to be ready to move quickly. And I'm seeing it happening in 2 to 4 months. If you're switching your mortgage, I'm seeing that happen in 6 weeks. So things are moving quickly. It's a tough market out there, but there are properties available. And the great news is we've got new lenders in the market now in Ireland. So things are moving a lot better. But that is your mortgage journey. Yeah. Any questions on it at all? Just, as I said, pop them in the chat there and we'll get to them. Mortgage checklist. We're nearly there, guys. I see I'm doing for time. I think we're doing good. Yeah, look, I'm a tiny bit over, but hey, we'll be finished now in about, we'll finish the presentation literally in 3 or 4 minutes. Right, mortgage checklist. I'll go through some of these documents because it's really important. And apologies if I'll rattle through them a bit, but lenders look for your last 6 months bank statements of all current accounts, including Revolut, and they must be valid fairly recently. Now, what they're looking for in bank statements is they're looking for, have you gone overdrawn? That means going into the red without an overdraft. They don't like it. If you have an overdraft, they'll forgive you for it. Gambling, a lot of financial advisors and people on talking about mortgages tell you gambling's a disaster. Depends on the level of gambling in your account. Try and avoid it if you can. If it's the odd flutter in Paddy Power, don't worry too much about it. If it's excessive, we could have a problem and we may send you away for 6 months to get it right. Yeah. So again, it's not a disaster. They only look at 6 months. Latest employment details summary. That used to be, for anybody who remembers P60s, but it's latest employment details summary is literally what details your last year's earnings, and it's available through my account on revenue.ie. Lenders want to see it. Last 3 months pay slips, or if they're fortnightly, like some of you will be, then they'll want 6 just to prove what salary you're on, and for us to take any variable income and things like that. So last pay slips really. Last 3 months credit card statements. If you have a credit card, if you don't worry about it. Last 12 months loan account statements. If you have a loan, if you don't worry about it. While I'm talking about those though, everybody should get off to the Central Credit Register, or CCR, to get your credit report, just in case somebody has said something in the past about you. It's a free report and you should go and get it because that will detail all credit agreements and things. Because a lender forewarned is easier to get a mortgage with than frightening the life out of a lender underwriter. They don't like surprises. They're I won't say they're boring people or anything like that, but they don't like surprises. Yeah, they'd rather be forewarned. Salary cert to be completed by your employer, or in the case of teachers, statement of earnings for public sector. Because I know salary certs can be a bit of a nightmare to get. Statement of earnings is a better document for us to work off when you're looking at getting a mortgage. Copy of signed passport or driving license, just so we can have a look at you and see who you are. Copy of marriage cert if you're married. If bank statements don't have your current address on it, utility bill. And if your partner, if you're buying together and your partner's self-employed, they'd have to have 2 years filed and paid accounts. And if anybody out there is thinking of doing a self-build, we specialize in those. We just need costings, plan information, but we can get your approval for it before you even got your full costings. Yeah, so it's so again, but that is literally your mortgage checklist. That's your heavy lifting. We do it all on an online portal, so you can do this 24/7. You don't have to be emailing them into me or anything. You can actually upload them all onto the system. We fully assess things like this before we put you in for an approval. And we rarely go in to get somebody approval if we don't think they're going to get approval. If we thought there was going to be a bump in the road, we'd let you know, and we'd let you know by assessing these. The one things we can't do is do a credit check on you. So hence, it's always a good idea to do a little credit check on yourself in the background. But that's your criteria. Cool. I've just got one more poll here, guys, if you don't mind. And then we'll go on to any questions and answers. Hang on now. Or two. Okay, if you wouldn't mind having a look at that for me and answering those questions, that'd be great. I'll only share it there for literally 30 seconds. If you wouldn't mind popping some answers in there, maybe fabulous. It'd be really useful. And as I said, questions we're going to go through now in a moment, and that'd be really useful if we have any questions on stuff that you think I haven't covered yet, because it just add to everybody's experience this evening and give us a good indication. Cool. I see most of you are saving for a deposit. I don't blame you. Everything's going up. It's yeah, it's a hot topic at the moment, isn't it? Cool. Okay, look, I'll end that poll and we'll get that off. Really useful information for us when we're looking ourselves. So it's Okay, look, we're going to question in a minute. Look, I want to say a special thanks tonight to at Kira's Classroom. She had a lot of followers there on Instagram, and she shared that we were doing this webinar tonight. So really, really appreciate that. So it's actually Kira's Classroom. We do everything. We say a 30-minute call there, and you can book Calendly appointments through our website, sysmortgages.ie. There's lots of useful information in there as well. You can follow us on Instagram at SYS Mortgages. You can fill out an inquiry form. There's calculators and everything on our website, or you can email me directly. It's Sean at sysmortgages.ie. Forget the info. Sean at sysmortgages.ie. I'll answer any more complex questions or put you in touch with one of our senior brokers, and they'll talk you through the mortgage process itself. So look, that's all the shout outs. Cian, have we got a few questions?
Yeah, sorry, I do. Okay, so I'll start with the first one. Sean, it's how is self-employment assessed, and can it be used alongside to boost up the pay scale?
It can, if it's deemed sustainable, and as a teacher it probably would be sustainable, and it depends on how long you've done it for. If we had 2 years accounts where you filed and paid those accounts, then we could take some, if not all, of that self-employed income, and I assume it's a sole trader. Even if it's a limited company, we can take that into account and literally do the income multiples on it. So the only real self-employed income that you can take and is difficult to take is rental income. So if it's a rental property and you're trying to take it, Avant Money would take a certain amount of it, but that's fairly hard to get through. But self-employed income, yeah, sure, you can.
Okay, thanks. Next question. Is the process much different for a self-build as a current homeowner wishing to keep the first house and build a new home?
It is in that instance, and you'd have to probably tell a little white lie, because yeah, if you'd say you're renting out your current home and you're going to be living with family and friends while you're building the new home, because that's otherwise they'd assess you on having 2 mortgages while you're in the process. Now, when you're doing a self-build, you can go interest only for the first year and so on, so it cuts down your mortgage costs while you're building the property. But technically, yes, you can keep your existing property while you're doing a self-build. It is a little bit more tricky, and you need to be able to find your way around that, because the 3 lenders who offer self-builds are a bit more tricky. But I'd email me on that one, Sean, at SYS Mortgages tomorrow, and I'd gladly, or I'm out of the office tomorrow any day, and I'll come back to you on that. No problem.
Sorry, okay. Are mortgages available for modular homes?
Great question. They're very difficult for modular homes unless they're in the ground, and that's the problem. A lot of modular homes, you have to pay for it before it leaves the factory, and the lenders won't lend money unless it's in the ground. So it's a way of getting around that. There's a certain company who's doing it up near Mayo and finding it near impossible to get a mortgage on those type of modular homes. If you're doing a self-build and it's going to be a modular home and the engineer is willing to stand over it, then yes, you potentially could. But if it's a built home and an engineer is standing over it and it's gone through the proper building regs, yes, you can.
Okay, thanks. A client here, I know it's a very common one, Sean. I don't have a permanent contract and I'm currently subbing. Can I still apply for a mortgage?
If you're applying solely, you'd find it very difficult. It depends on how long you've been on the temporary contract and if you're paid in the summer or not. I would imagine you're not paid in the summer. If you're not paid in the summer, it's very difficult. The ones I'm getting over the line at the moment is if you're still subbing this year, but your CID pending in September, then yes, it's possible. If you've been subbing and you've been paid in the summer, then there is potential that we could get a lender to fit, i.e. like Nua Money, for instance. They're very forward thinking on getting people mortgages who've got a little bit more quirky around their income.
Okay. There's a couple of questions here, but I'll make sure we'll get to them all right. What schemes are available for first-time buyers or second-hand home? I think I missed it earlier on.
Yeah, the only schemes really are your derelict home and your vacant home grants for second hand homes. That's the problem. There aren't a lot, and that's why the government are looking at it closely. But you got the derelict home grant, and you've got the vacant home grant, up to about 70K. The only problem you've got is you have to do the work before you get the money back. So there are those grants available, and there are the SCAI grants available. That they're available to everyone now. This is not just first-time buyers. The SCAI grants to actually modernize your property to get it a better rating, because the better the rating, there are things called green rates out there for B3 or better properties. So hopefully that answers the question.
Okay, thank you. Sean, if applicant's partner is a farmer and is working, is there any other grants or paperwork that they should have been made aware of for application?
No, not really. Now they are a bit more tricky because you're looking at the farm accounts and so on. And it depends if it's now very few farm accounts I'm seeing that are limited companies, but it's basically it's almost assessing them on if they've got a share in the farm, a share of the sole trader, profits and so on. So a little bit more tricky. Yeah, it's and you be careful which lenders you go to.
Okay, there was a person online tonight that wants to change their answer in the first poll to yes, that they would like a consultation. Can we get that looked
Oh,
after? Or?
yeah, fine. If you would you mind dropping me a quick message at Sean@sysmortgages.ie, and then I'll certainly look that after. I'll look after that for you, and I'll get you looked after. Just say you got the wrong poll, and I'll realize, and then I'll put you in touch with one of the senior brokers. No problem at all. If I don't do it myself.
Okay, I have the name taken anyway, Sean. So
Oh,
if you need
great.
that
Oh,
message,
super. I can do that
yeah,
then anyway. Yeah,
perfect.
brilliant.
Can I apply for a mortgage without a CID permanent contract? I'm in line to get it in September 2026.
You can, if we can get documentation or somebody to back it up that you're going to get it in September 2026. So I know you won't have your contract yet, but if we can get something from the department or the principal to say, yeah, look, you're getting it, then certainly it's a case to be fought with a couple of lenders. They do them on a case by case, so nothing's ever guaranteed. But for example, I'm sort of two teachers at the moment who are getting CID'd. I know it's sooner CID'd in September of this year. So, and the banks truly, they went to one of the banks and they couldn't help them, and I was flabbergasted. Yeah, so it is possible.
Okay, thank you. If a client had a career change in recent times within the last 3 years and had a significant salary drop, how detrimental to an application is that?
Well, it depends on what the salary drop is, and but it's a great question because with any lenders, we run numbers through calculators, and it is based on incomes. And I'll give you a real life example. I've had a teacher recently who's got a young baby, single applicant, and they're on job share because of this, and they're on about 30K at the moment. If they go back full time, they'll be on 55K. I could not get them a mortgage on 30K. No lender would give them anything because they all look at net disposable income and what it costs you to live. They've all got these secret figures in the background. Lenders don't like children, no bones about it. So if you think to get a mortgage, get your mortgage, then have kids. I know it's not as easy as that all the time, but hey, that's where we are. That's what lenders are like. So they'll assess you on what they deem you need to live off before you'll have money left over for your mortgage. So really depends on the salary cut and whether you're buying singly or not.
Okay, thank you. Can you get approved if you're not on a permanent contract? So this client here is on a career break from a job in Dublin to save. Are they better off keep the permanent job in Dublin even if they won't be purchasing in Dublin?
You are the only thing you've got there is, and again I had it yesterday with a teacher in Dublin. They wanted to buy a house in Donegal, and the only way I could do that from was to do it as a holiday home, and then you need a 30% deposit. But yeah, if you go on a temporary contract and you move out of Dublin, you'll find it hard to get find it very hard to get a mortgage. But then there's also traveling distance between work and the house being vacant during the week. Lenders don't like it, so there are ways around it, but they're you tricky enough.
Okay. This attendee is looking for just a workaround. They're waiting on their mortgage approval and are having problems because they're on a teacher's fixed term contract.
Yeah.
The lender, whatever, they mentioned what lender they're going to, but they asked for a new contract for next academic year. They've been waiting now since January. Is there any workaround to this, or
No,
would
well,
you wait?
change lenders. It's that's the trick there. But I know the contracts have been slow to come out. I think they're due now. But they will. Yeah, if you haven't got your contract for the next year, and I've seen it recently, we're looking at a couple who are teachers, and the lender has been fairly insistent on the contract, and I'm hoping it's coming through any day now. So it's tricky. Yeah, they'll all want to know that you've got a job for the coming year. So, and that's the problem with the fixed term contracts, isn't it? That they'll finish in either August 2025, and then they'll want to know what happens after that.
Okay, perfect. There's an attendee here that says they can't message in chat for some reason. So, but there's a workaround here. Just 37 years of age with 3 children and pay rent each month on a pay scale 3 teacher. Not made permanent, but what they want to know, does that rule her out of ever getting a mortgage?
It depends on if is it going to be a joint mortgage or a single mortgage. It's I
Sorry to mention that it's single with 3 children.
that's all right. I had I thought there was no hope. I did a mortgage through New Money for somebody today. They had 3 kids. They were on 50K, 50,700, and I managed to get them nearly 200K. Now I know might not be enough to get a house, but there is. I know if I took you to like the Bank of Ireland or somebody like that, then potentially not. But if I took you to ICS, who would potentially take you 5 points up the scale, then yeah, anything's possible. There is flexibility when you're going off the grid with certain lenders, and then you'll build up a payment profile when you've got a mortgage. So you might be with ICS mortgages for 3 or 4 years, but then go mainstream because you've got payment history and everything behind you. So certainly worth a try, and we don't charge for doing the calculators for you.
Okay, so next question. So a trainee teacher, i.e. PME since August 2024 and will remain until April 2026. What's the criteria if I'm going to have a chance of getting any approval?
Again, you've got your it depends if you'd have what's going to happen after 2026. Will you have CID pending at that point? There is flexibility out there now. I'm thinking of Newer Money. I don't represent just Newer Money, but they are a lot more forward thinking. So they do every case on a case by case. It would depend on the earnings you had and what your employment detail summaries looked at for the last year and a bit. So at least we could try and form a picture of how much you likely to earn in the current year. Yeah.
Okay. With regards to borrowing power and the fact that teachers can get up to 5 points more on the scale, does that apply for other public sector workers too?
Oh, it does. Yeah, it's public sector across the board, and even things like Garda, I can get 5 points up the scale and use their boot allowance and things. Nurses use Sunday allowance if they do it regularly, and so on. So yeah, it certainly does. And civil servants, yeah, but it has to be pure public sector. It can't be semi-public. Yeah, it has to be pure public.
Okay. Can the Help to Buy scheme go towards modular homes?
It really depends if the people or the person who's building the modular home is recognized under the Help to Buy scheme, then yes, it could. So it depends on their tax status and how they are, because when you're doing a self-build, they've got to be recognized. So there is so it would really, and if it's a modular home that's built that you're buying already, i.e. almost on a development, is the company who's selling them registered for the Help to Buy? So that's the trick there.
Okay. Another Help to Buy. Is the Help to Buy and First Home scheme only available for self-builds and new builds?
Unfortunately, yes, at the moment. There was, I heard a lot of talk about it. They're trying to bring it in for secondhand properties, but it's literally, it's now the First Home scheme is only for new builds. So you want to be careful there. It's the Help to Buy scheme is really for self builds. I haven't come across one yet where somebody's been looking for it for a self build.
Okay. Just the last message, I think it's from a previous one, just said mentioned the salary drop was around 50%. So I think that's for the early one that you answered.
Yeah, and if you're on half pay now for a teacher, you'll find it very difficult to borrow much, you know.
Okay. Unless there's any other last minute questions, or I think I've got them all. I'm pretty
Brilliant.
sure I got them all. Yeah.
All right, guys. As I said, if there's any other questions that pop into your mind
Oh,
overnight,
sorry, Sean. Just one last one.
yeah.
Hi, folks. Apologies. Could you please? There's a couple more questions that have come in. Sorry. Could you please summarize how you can move 5 points up the scale?
Yeah, great. If I have two teachers, the higher teacher, I can take 3 points up the scale. The lower earner, I can take 5 points up the scale. So if you want to be really coy about it, you're almost going 8 points up the scale. So there are exceptions to that, whereby there is a limited pot of money within ICS mortgages that they will allow a single applicant to go 5 points up the scale. So, but it's literally done. That's done on a case by case basis. But if you're public sector and you're the lesser earner of the application, and applicant one might not be public sector. So i.e., I'll just generalize it. You're married to an accountant who's on 60K. You're a teacher on 48K. I can take the teacher 5 points up the scale and look at an income that's maybe 60K. So then I'm doing 4 times 60 and 60. I'm getting you a lot more money. I'm getting you 480,000 euros. So hopefully that explained it.
Yeah, thank you. Apologies, it's coming in as an anonymous attendee, so I think it's still in relation to the 50% salary drop. They just asked, would it help if you had your own capital of 200K? Does that make a difference to the mortgage providers?
But it's a brilliant question. It does and it doesn't. All a bigger deposit sometimes gets you is a better mortgage rate, because your what we call loan to value is lesser. And what we call loan to value is, i.e., if you've got a 40% deposit instead of a 10%, then you might qualify for better rates. And then potentially, because the monthly mortgage payment is lower, you might be able to borrow more. But lenders still look at your income. If you came with €1 million and you were on 20K a year, I could still not get you 4 times 20K. So the deposit really doesn't make that much of a difference.
Okay, I think there's a couple of messages Sean is coming in sent. Thank you.
Brilliant. Okay.
Yeah,
Fabulous. All right, guys, get in touch if there's anything else, and then hopefully and share our details to any other teachers or anybody you know who's looking for a mortgage. We'd be pleased. As I said, it costs nothing, and we've got all the lenders out there, and you get the same rates. So it's hopefully a win-win. All right. Thanks ever so much. Thanks, Cian. Thanks for all your help.
Thank you.
Thanks. Bye-bye.